Well, they fumbled the launch, but then it opened up. And so far, on the first day that the ETF's been open, we've seen $4.6 billion of trading happen on it. That's pretty massive. Now, to put that into some perspective, 4.6 billion, that's in trading. That's how much has moved daily. But I mean, you're talking an asset that already does 40, 50 billion a day. So potentially, it's less than 10% of the total amount of daily transaction jumped into the SEC. So it's not overwhelming, but if we put it into perspective, maybe it is. So we saw, Bitcoin's a lot of things. A lot of people compare it to like a digital gold, like a store of value. But if we look at gold, we have gold ETFs. A lot of you might own gold through an ETF. And if we look at gold ETFs, what we can see is the very first one was SPDR, SBDR is the symbol, Spider Gold Trust, with the symbol is GLD. It's the most well-known ETF. It's been seeing significant growth, and it launched in 2003. All right, it launched March 28th of 2003 with an initial assets under management of around 115 million. So when the gold one was launched, it got 115 million. Now that's assets under management. We don't know exactly where the assets under management will end up in these Bitcoin ETFs yet. We'll have to let the dust settle a little bit. But we see 4.6 billion in trading. So we'll probably end up at $1 billion versus 115 million in gold. Sorry, gold guys. Now by 2004, by the end of 2004, which was almost 2 years later, they had grown to about 1.5 billion. So it took gold almost 2 years to get to 1.5 billion in assets, and I bet you the Bitcoin's going to be there in a month. Sorry, gold guys. Sorry, tulip haters, or whatever. I don't know. We'll see what happens. Then we saw other ETFs pop up. I think there was 5 gold ETFs that popped up in the first 5 years. We saw iShares, COMEX Gold Trust, IAU launched in January 21st, 2005. We saw ETFs, physical gold, that's the GOLD, launched on November 18th, 2005. We saw another one launched September 2009. Sprott Physical Gold Trust launched February 2010. Aberdeen launched October 15th, 2010. So from 2003 to 2010, we got 5 that opened up. 5. Now, to put that into perspective, we just got 11 Bitcoin ETFs approved. So it took 7 years to get 5 gold ETFs, and now we got 11 Bitcoin ETFs in the same day. Pretty amazing. When the gold ETF launched, the price of gold was about $327 an ounce, $327. And by the time the 5th one launched, it was up to $1,300. So from $300 to $1,300. As I said, that was 5 gold ETFs. We saw 11 Bitcoin ETFs launch at the same time. Now, Bitcoin is the single greatest asset of all time. It's been growing really, really fast. And now we have 11 ETFs. And what we saw, which was pretty interesting, is all of these ETFs that were getting approved were starting to fight over, they're fighting for you, right? They're fighting for you as a customer. And they started fighting by changing their price structure, how much they'll charge you to use their ETFs. And they started moving the prices down lower, including, even free for a while, right? Eventually they'll charge you, but even for free. And it made me think that, one, obviously, capitalism is that when competition is there, you and I as a consumer get better products, better service, better prices. So that's good. But what it really made me think was that if all of these ETFs are willing to drop their fees that low, they must be expecting a massive amount of inflow, right? Because they need to have money. They need money to cover their costs. They're not doing this for free. It's very expensive because of the bureaucracy and the red tape involved in the financial industry. It's very expensive to launch an ETF. As a matter of fact, I looked into launching my own ETF. There's another YouTuber, Meet Kevin. He launched an ETF, and the company that launched the ETF for him contacted me about launching one as well. So I looked into it, and it's very expensive. You're looking at on the low end probably $500,000, if not millions, and to get the ETF. If you're one of these big companies, millions for sure. And so you're not going to launch that if you don't think you can make money. And they were lowering the price so much for competition, and they can raise the price later potentially, I guess. But what it shows me, and most people kind of commentating on this that understand, is that they're probably just expecting a massive amount of assets under management. So even the low amount of fees at the percentage basis is still enough to cover that. Now, another thing that's interesting, if we compare this to a gold ETF, is that this is the first ETF in history ever in which the underlying asset, in this case Bitcoin, has a fixed supply. So what do I mean by that? So in a uranium ETF or an oil ETF, and certainly in a gold ETF, when more people buy gold and the price of gold goes up, what happens? So when they jumped into the gold ETFs and it pushed the price from 300 to 1300, what happened? Well, more gold companies and gold miners went to go get more gold. When it's $300, you have a few people mining to bring gold to the market. When it goes to $1,300, they're rushing to go get more gold or more uranium or more energy to the market if the price goes up. But Bitcoin is the first asset in history that can't do that. Bitcoin has a fixed supply. So what happens with that? Well, we don't really know. We don't have history to tell us, but let's just say number go up. We call that NGU. NGU technology is sort of a tongue-in-cheek way to say that. But the price would go up. We've never seen this before, and it could be very volatile. So I would expect massive amounts of volatility because of this. Now, some of the volatility has been because people are leaving some of the more expensive ways to own Bitcoin in the past through funds like this, such as the Grayscale Bitcoin Trust. And so that's also part of the volatility and start of the liquidity that we're starting to see, withdrawing from those funds, moving into the other ones.